Hello, everybody. Welcome to the Trader Merlin Show. It is your, heck, I don't know what day it is anymore. I think it's a Tuesday edition of the Trader Merlin Show. We've got a pretty interesting show today. One of the guests we've had in the past, actually October 13th of 2020 came on. He is the editor of the Stock Traders Almanac. Came on and gave us all kinds of great market insights as to where things may be headed, and one of my personal favorite things, which is statistics. I am a lover of numbers and actuarial data, and there is no one better that aggregates that data and organizes it into cohesive thoughts than Jeffrey A. Hirsch of the Stock Traders Almanac. You can find him on a bunch of different websites and Twitter, which we'll talk about here in just a second, but let's bring him on. Jeff, how you doing, my friend? Been a long time.
Great, man. How are you?
What
did I say back in October 2020? Was I right?
I didn't remember the exact show. I don't remember exactly what we covered, but I do remember you giving us some great data, which I incorporate into my trading. So I appreciate that. Even things like, I give Yale a lot of credit for the Santa Claus rally. I correct people when they think Santa Claus rally starts in October. It's like, no, last five, first two. Make it simple, rule-based approach. So we followed that.
He's the guy who invented it, man.
I know. That's why you got to give him props at the legacy people in this industry that create good things that help us as roadmaps and guidelines for the financial markets. So you're continuing on a great legacy, my friend.
I thank you for that. I try every day.
Let's go into broader market pieces here. Just start with kind of big picture. As we approach 2024, or as we enter 2024, every trader, every analyst has something that they think is the hot topic, the buzzword, or going to be the most impactful thing for 2024. So I thought I would ask you our first question, which is, what's your biggest concern for 2024?
Well, the thing that I think is most impactful is probably the election. I mean, we're 4-year cycle people. The power of a sitting president running for re-election is pretty strong. S&P's up 12.8% when it's a sitting president running, down minus 1.5% when it's an open field. We've been tracking a 4-year cycle very closely. Last year was a picture perfect pre-election year with solid gains across the board, a lot more than most people thought, even a little bit more than I thought, even though we were pretty bullish. So that's the biggest factor, either positive or negative. If something were to happen where current president was not looking as strong, I mean, the poll numbers aren't great right now, but it's early. That could sway things with the market. But generally, the other concerns we have, interest rates, the 10 years rising again, there's the political shutdown. So I wouldn't say I have one thing. It's kind of a little basket or cocktail or potential things that could go wrong. Inflation, is still elevated. It's under control. Anything should tick up there. The market's already consolidating and taking some profits here on some fears the Fed's not going to give them all of the rate cuts as fast and soon as they thought. So those are some of the things that we have concerns about. But I'm generally bullish for 2024, not as much by any stretch as I was last year.
Okay, good to know. One of the stats I was looking at was, I believe I picked it up from you guys, which was that during a pre-presidential election year, the year before, you get about a 17% rate of return, and during a presidential election year, 7%. I found that kind of interesting because that is kind of historically below the average rate of return for the S&P. Yet this market stigma is presidential election year, markets do good, but it seems lower than average at 7%.
It's the pre-election year that's the year where markets do great.
Yeah.
And the election year, 7-8%, depending upon what index you look at, is pretty average.
Yeah.
I mean, it's the average year. Midterm years are where you get most of your trouble. Post-election years are used to be more troublesome. Lately, it's all been consolidated into midterm years that we had in 22. But the different wrinkle that I'm trying to highlight here is the fact that we've got a sitting president running, where the prospects for the civic, economic, and geopolitical positioning and policies remain the same or high, and the market likes certainty. Mm-hmm. And if you change that, we're not sure what we're going to get, so the market tends to be weaker in those years when you don't have the potential for the same person, same administration running things again. Whether you like them or not, you know what the ground rules are.
Right. And what did you say the percentage was that when we have a sitting president? re-election year?
12.8.
12.8. I'm gonna have to redo my evaluation. I actually I decided to cheat this year. Normally I'll go off of all the technical stuff, and I'm like, you know what? I'm going off 7% flat. I might have to increase that to 12.8 now.
That's why I have the forecast. I know you wanted me to tell you where I think the S&P is going to end, but the forecast number that I have, it's not a price, an S&P level. It's a percentage range that we have. Our base case scenario is about 8 to 15% for the broad indices. Yeah, a little bit wider than some people might like, but that 8% is right in the historical averages for market gains in general, depending on where you start. And the 15 is the higher end with the sitting president, and that includes potentially greater gains for NASDAQ, especially with the techs continuing to lead, even though they're a little profit taking here in January. And this kind of performance behavior in January and in election years, if you look at some of the election year seasonal charts I've put out there, is to be expected.
Yeah.
I mean, think about it. The reason why January and the early parts of election years could be, or the reason why they are a bit weaker and softer, is because of all the gains that we historically see in the pre-election year, especially that fourth quarter rally. I mean, I throw up a chart, there's this thing where you have these gains from midterm lows to pre-election year highs of about 48% for the Dow and about 68 for NASDAQ. And you see those annual highs in the pre-election year. The biggest chunk of them is in December, and a good number of them are on the last trading day of the year. We had the second to last trading day was the top or the high for the year for S&P and Dow. I think it was the third to last day for NASDAQ and Russell. So, I mean, just picture perfect 4-year cycle seasonal behavior. So, a little profit taking consolidation here in January and in January of election years is to be expected. I mean, that's what we have put out there in the January Almanac that we put out there for the newsletter at stocktradersalmanac.com. We put it out there on Twitter and the socialists. I'm sure you see that, but this is, to be expected.
Yeah. Let's go into that a little bit more. You talked about the January effects, and I know that there's three. There's that Santa Claus rally for one. Then there's as goes the first 5 days of January, and then you have the as goes January, so goes the rest of the year. If you guys aren't following them on Twitter, make sure you sign up for that one right now. It's at Almanac Trader. I have it up on the screen here, and I'll post it in the chat in just a second. But just about every day he posts out just data, just straight statistics. So, you don't get someone's opinion about anything. It's just data. There's the analytics, and that's the best part.
We might give a little analysis on
you do. Yeah. But what I mean by that is, you watch a CNBC, Fox, or Bloomberg, and it's like you got these guys just pushing some agenda because of their numbers that they've pulled out of thin air. It's like, I want to see the actual data. So that's why I'm a fan of what you do. You've got these 2 out of 3 things have missed. Santa didn't show up this year. First 5 days have been negative. Mm-hmm. Last year, actually in 2022, right? With 2022, we had a nice big down year. January was negative. Are you putting much weight on that this year?
There's always weight on it, but it's not done yet. So the granddaddy January barometer. Now, people confuse this January effect with January barometer and the January indicator trifecta that we created. First of all, Yale Hirsch, my late father, created the Santa Claus rally and the January barometer. First 5 days has been around for a long time. Everybody's using it and stakes claim to it. But, as Yale said years ago, back in '72 when he created it, if Santa Claus should fail to call, bears may come to Broad and Wall. So doesn't mean they're going to, but it usually indicates that there'll be an opportunity to pick up stocks at lower prices a little bit later in the year. Could be as soon as later January, first quarter. So when the trifecta, when the Santa Claus rally, the first 5 days, January barometer, full month, are all up, you have years up, including last year, 29 of 32 years. That's 90.6% of the time. Average gain is 17.7%. Similar gains for the subsequent 11 months. And when any of those 3 are down, the numbers are softer here. So right now we have a negative Santa Claus rally, negative first 5 days. The 3 times when you've had that and the January barometer is up, you've got 3 years, average gain of about, I just posted that out there today.
Average, I think it's 19.9. I've got it up right now, yeah.
You got the numbers there. So it's what? There's a couple of 20+% gain years.
Yep.
And you got the 7.1.
Averaging
So
19.9. Yeah, that's great. I mean,
19.9. Thank you. Appreciate that. But that's only 3. And the bottom line is that if the full month barometer comes in, it's going to be more encouraging. But, we're not expecting huge, big gains this year. We're expecting pretty average, maybe slightly above average gains, not like we did last year. So we take it to heart, but it's a warning sign. It's not binary.
yeah.
It means do your homework and look at the rest of your analysis, your technicals, your fundamentals, the other, talents or techniques you have as an investor or a trader. And it's worth noting. And there's also the December low indicator, which is that line in the sand that we mentioned there. And December low was December 6th, 36,000. This is the Dow.
Yep.
A 36,054.43. So if that gets crossed in the first quarter, it's another warning sign to watch out. And we've seen if the January barometer is negative and we cross below that, we could end up softening our outlook a little bit. Right now, not much has changed fundamentally. The macro picture is the same. Yes, there's the geopolitical concerns. They're rampant. They're always there. So you always have that there. But all things being equal, the economy's pretty strong. We've got some pretty powerful new tech out there, and not much has changed. We've got a sitting president running. Fed's potentially engineered a relatively soft landing. Yeah, I'm concerned about Santa and the first 5 days, but not overly.
Right. For everyone who follows this show, that I love data statistics, a lot of which I like to quote from Trader's Almanac. And one of the things that you got to understand is everything works until it doesn't. When you have something that says, oh, it's got it works 4 times out of 10 or 10 times out of 10. Well, there's always that opportunity that's not going to work the next time. So make sure that
we always look for those something and O's, those 10 and 0, it's up 10 out of 10.
Yeah.
It's bound to break when it starts breaking.
And
everybody was talking about the seasonality and the Santa Claus rally all since August. So that made me a little bit apprehensive as well when everyone's talking about it.
Yeah, well, I like the fact you've got just kind of trifecta shaping up here and historical data to back it up. And it's one of those things, guys, that if we do come out with a lower January and it's lower on that barometer, then, we might have some bullishness going forward. It doesn't mean necessarily short them if you got them. It means be a little more cautious, have some stops in place. And, who knows? We could have all 3 of those indicators show bad news for the markets, and markets rally to all-time highs and go ballistic. So just make sure you have stop losses in place and don't put everything on the data, but use it to help your probability in your side. The second question I have for you, which I think you kind of touched on a little bit, was market segments. And I know maybe not your area that you dive into specifically, but are there market segments that you look at and you say, this one I think is going to do really well or this one might do poorly?
Well, we do look at sectors and segments and individual stocks. We have portfolios that we build using seasonals and fundamentals and technicals. One thing I want to mention is we did this Bitcoin seasonality study released it back in September. I don't know, did you catch that at all?
I did not. I'm a huge Bitcoin fan, so.
So the seasonality of Bitcoin, and I was not a huge Bitcoin fan. I'm still a skeptic, but one of the seasonal studies that we did, I put it out with Adrian Zdunchik. He's the crypto burb, big following, I call him my crypto guru. And I'm not interested in getting in some coin exchange and trading coins and stuff. So I picked up some GBTC back in early October.
Okay.
And one of our standard trading procedures here at Stock Traders Almanac in our Almanac Investor Newsletter is selling half on a double, especially with the small stocks that, we kind of look for that. So my intention all along was to sell half on a double of my GBT position. Looking at the trading today, earlier, just before the close and with the news out there, it was up at 39.80 or something. Yep. I sold half my position, not quite a full 100% gain on half. You sell half on a double, take your initial investment off the table, let the rest ride. Great strategy for speculative trades. So I took, half off this afternoon. So I know that's not it's not exactly what you're asking, but it's a sector that is sort of on my radar, not officially in the newsletter, but something we put out there for the public that I actually happen to be my best trade this quarter, this this period. So
does the climate for crypto, in particular Bitcoin, obviously everyone right now is just on edge about tomorrow. Do we get the approval for ARK's, Bitcoin ETF? And it seems like you're seeing a little bit more openness to the markets towards Bitcoin. I know it's kind of been this taboo asset class. You still don't have a lot of companies holding on their balance sheets, but you have the Bank of International Settlements is saying that central banks can now keep it on their balance sheets, and it seems like we're softening the hostility towards at least Bitcoin. We can talk about these other securities that Gary Gensler's got it out for. Does that overall impact your thought process on it being a good performing sector? Because it seems like regulation is going to start to come down and maybe clear the path for more digital assets.
It does make me more comfortable with it. The other ones I'm really not interested in, personally, Bitcoin and the Bitcoin ETFs. I'm an ETF guy, so that's what I'm interested in. I'm not getting involved in, Merlin's coin or whatever.
I do have one. I
had a feeling. It's not my...
No, I only have...
bag,
I'll tell you, I created just because I want to see how easy it is to create them. It takes 7 minutes to create a crypto. And most of them, let's be honest, are shit. I mean, most of them are scams, pump and dump. But there are some...
I want back.
Yeah, exactly. Well, you got to know how easy it is to create these things. All right, we'll keep you away from the altcoins, that's for sure.
Yeah, I'm not into that, but I think it makes it the big thing was when the futures began trading in 2017, and the seasonal chart that you'll have to go check out that I put out there has a few different different time frames. One of the time frames is starting in 2018, just after the CME futures came out. Still a bit small of a data set for me to really get behind it on a seasonal basis or a historical basis, but it was comfortable enough for me to go ahead and take a position. So, and I figured I was putting something out. I should eat my own cooking. And admittedly, it was a trade I was most nervous about. But as my father always told me, you'll find out that the trades you were most nervous about are often the ones that do the best. So
that's true.
There you go. I mean, other sectors we're looking at. I mean, we have a whole ETF portfolio. We've got a bunch of positions on. Seasonally, we got into some copper trades, the CPER, the COPX, also the Spider Energy. So a lot of the sector seasonal trades for the stock sectors come into play around October. We have our best and worst 6 months strategy. We're in the best months. We picked up, got a little bit earlier. We got into the I call them the diamond spiders and cubes.
Yep.
The Russell 2000 also. October 5th, we got in there. So sectors for 2024, I mean, technology seems to be the place to be, and the Qs are just as good a vehicle for that as anything else. There's some rotation going on out there. I don't have a sector for 2024. I'm sorry to
it's okay.
Disappoint people, but that's not how we trade. We use the seasonals and the technical setups and the fundamental analysis on that. I can tell you that natural gas is up a bit, but its seasonal trade is coming around. We're going to see how that sets up, especially if it's got some renewed underlying strength as it enters into that seasonally favorable period, which starts in February. That's some of the things we'll be looking at.
I mean, natural gas has been smoking. It's up 51% in the last 3 weeks. I mean, that's pretty damn good.
That's right. Very damn good.
Well, we'll see if that one keeps on running there. All right, so you got kind of broad base. One of the things that you mentioned, you talked about energy, and it looks like you're doing some seasonal plays there for energy. Does that imply bullishness kind of towards the energy sector over the next quarter or 2 quarters? And I say it is a baited question, by the way, because I think...
It does. That goes to about May, that seasonal trade. But, I don't see a real, negative or bearish macro setup for energy. I mean, we're using lots of it. I know there's a lot of push towards clean and alternative energies, but I don't know. I see a lot of combustion and a lot of gas and oil being used and gasoline. I don't think there's a slowdown in demand there whatsoever. The world's not getting much smaller at all. So
Well, it's interesting because I have it as one of I did my 2024 outlook and kind of answered the same questions I'm asking you, and my number one for the year is not the election. I think that's kind of not necessarily priced in, but it's like we know what's coming. The big unknown for me is energy. And I look at what has caused inflation to drop so much. It's been energy because that super decline. You know, if we get a tick back up in summertime or in the next few months, then inflation's back on the table, and all of a sudden these 6 to 7 rate cuts that the market is expecting, you know, we may get 3 or 4, which would be drastically lower than what market's expecting, and that could have a lot of undue volatility for our markets.
I think that expectation of 6 or 7 is gone. Yeah. I don't think the market expects that anymore.
Well, I look at the CME Fed Funds futures, and actually, as of today, it's still pricing in 6, which is crazy.
Yeah, that changes though. The CME futures I look at all the time too, but the stuff that's further out is not as accurate.
No, it's pure speculative.
The near-term stuff.
Yeah, they've got right now is a 32% chance of 6 rate cuts. So I don't think that's going to happen.
The Fed futures market may be expecting that way out, but I don't think the market, the people are actually really expecting 6 or 7 cuts in 2024.
Especially when the Fed says we're going to do 2 or 3. I mean, they said that they're going to drop to 4.6%. So it's
they've been doing what they've been saying for quite some time now. So take them at their word.
Absolutely. Anything else you want to share? So I can't hold your foot to the fire on a specific XPX number because I have a spreadsheet. And by the way, if you win, you get 2 Merlin shot glasses. I know those will be centerpiece of your liquor cabinet over there. You probably don't even drink, but
I've been laying off. Let's see.
So you got between 8 and 15%. I was going to split the difference and put you down for that number, but we'll see what.
Yeah, okay. You want to do the math for me on the close? I don't have the close on the top of my head.
I do actually. So let's see.
S&P close
between 8 and 15%. So you're looking at what, 11 and a half? Is that what that would be? Half that? Something like that. Let me bring up the spreadsheet here that has all of it in it, and I will give you the exact number. So it looking about
11 on what?
11. Oh, the SPX was at 47.69 at the end of close.
47.70.
So it looks like you'd be right around
52.50.
52.50 would be about 10.5%. But yeah, we could do that. I'll put you in for 52.50. Done.
Sure.
But when you surprisingly get an email from me asking for your shipping address, you'll know you won.
Awesome. There's one other thing. You remember my forecast for the super boom for Dow 38,820?
Yeah, I actually do remember that one.
You know when I made that?
And I don't remember the date, but I remember you talking about
it. First time we put that out was in the newsletter in May of 2010 with the Dow about 10,000 based upon a longer term secular cycle with war, inflation, and something we deemed culturally enabling paradigm shifting technologies. And now that we have inflation coming down and the Dow's up at what, 37,000? Where was it today? Or 36?
We're at 37,763 on the futures right now.
37.7, right. So pretty close, about 1,000 points away or there or so from that forecast.
Nice.
I would not be surprised if we hit that this year. My projection was for that to happen by the year 2025, which gives you to the end of 25. We might get that even before year end this year. It's not. We were so close at the end of the year that it was what, 1% or so, a few hundred points away.
Pretty close. You'll get there.
Yeah.
I don't think we've topped out for the year. I don't think that's the case.
No, I don't think so. We're still pretty close to that. So that brings in, the what's next question.
Yeah.
I don't think that means it's all over and we turn over. I don't foresee a recession coming this year. Maybe not until after the election in the, post-election and midterm year, the next cycle. But we're starting to think that, after this big run, we may end up getting into, a more sideways trading market for some period of time. We're still working on that, analysis, but it may not be the easy, super bull market that we just had from, that we've been in since 09, where everything's pretty much going up. Yeah, there were some blips in there, COVID, et cetera, but we may end up in a longer sideways, something more like the 70s and 80s. Once we get later, a couple of years out from now.
You're predominantly a more of a longer term investor, say maybe longer term swing trader, not shorter term.
More swing.
Yeah.
I longer term, outlook and forecast, but when I do some trades, it's usually You know, shortest is weeks, usually, in the several months to 6 months or so period of time. You kind of offer the best 6 month switching strategy, that type of time frame.
Yeah. Nice.
But if it keeps going up, like it's one of our stocks, we hang on to it,
There's no reason to jump ship if it's moving.
You lose your short.
Yeah,
right?
Absolutely. For those that are not familiar with it, if you go to StockTradersAlmanac.com, you can find out more information there. There's all kinds of great data and statistics in this publication. I got into it probably 15 years ago, and I'm addicted to the data. It's just one of those kind of fun things to read. So if you have anybody who's into trading, the physical book is great, but he's also got subscription services, which I know that many of you are already subscribed to. But if anything else you want to talk about that you guys are doing on your end?
Well, I think one of the big things that members like is our monthly webinars where, we present our outlook, for about 20 minutes or so, show some slides, and then we just open the floor to questions for about an hour.
Nice.
And I think that's something that we're finding is very productive. We learn a lot what people want to know and gives people an opportunity to ask us anything they want.
How often do you do that?
Every month.
Once a month? Nice.
Yep. The first Wednesday of the month after our outlook comes out for that one.
Fantastic. Well, listen, I appreciate you coming on. I know you got a bunch of stuff going on. It's probably you're on the East Coast, right?
Yep.
Oh, you're right in the middle of dinner time. Sorry about that.
It's all right.
All right. Hey, well, Jeffrey, thank you very much. I appreciate it. By the way, he will also be presenting in Las Vegas, right? You're going to be at the Money Show in February, 21st to 23rd?
I believe those are the dates, correct.
I think that's it. I may see you out there. There was talk about me going to present up there, but I don't know what happened on that one. But yeah, I think it's there. It is right there. I'll bring it up for you guys. You can find it on his Twitter handle, which is right there. It is February 21st to 23rd.
I'll be there.
Awesome. Hey, well, thank you very much. I appreciate you taking the time to come on the program today, and best of luck to you in your trading. I'll get you on before the next couple of years are up. I always enjoy having you on the program and hope to see you soon.
Thanks for having me, Merlin.
All right, take care.
Be good.
Guys, that was Jeffrey A. Hirsch of the Stock Traders Almanac. He is the CEO of the company. He's also the editor-in-chief of the publication. And I wanted him to go much longer, but he's got a bunch of things going on, and I feel bad taking up people's time. So, interesting. I like this perspective on markets. He changed some of my numbers in my head, talking about, 12.8% when we have a sitting president during election year, which would skew my number, but I'm going to have to stick with my original number that I went with. As far as best performing, it sounds like, based off that, his first quarter or maybe half of the 2024 feels bullish on energy. And that you saw me, of course, raise my eyebrow right away, because that's what I'm looking for, is a rally up in energy to cause the whole inflation discussion to come back on the table, and that creates even more waves. So loved having him on the program. And again, if you are in Las Vegas, I'll let you know if I'm going to be there, but he's going to be there February 21st to 23rd. He won't be there all those times. He'll get a specific date and time later on, but for right now, that's the window of time that he will be there. Let's see, what else do I have for you guys today? I do want to go into our overall markets and get into some of that. Yes, you guys, apparently somebody hacked the SEC or Gensler's account and was posting fake stuff about a Bitcoin spot approval. Didn't happen yet. It's not going to happen until tomorrow. There's actually a lot of talk that it may happen on Thursday. Who knows? At this point, I'm just going to sit and wait for it to happen. I do feel by the end of next week, we'll have some clear decision on a Bitcoin ETF, and that'll be a spot Bitcoin ETF. So let's run through our top 8 markets out here. Might be an early show today, make up for all these extra long ones I've been doing for you guys. The 10-year bond, here is get the daily time frame on this one. Here's your daily of it. You can see today we were just slightly down, so nothing that dramatic. The numbers here are kind of a little bit skewed. Yes, we do have inflation data this week, William. We've got CPI and PPI numbers, which I'll definitely make you guys aware of when they come out. And I think I'll show you that here in just a second. Bitcoin on the day. You had a lot of volatility. Check out the intraday chart of Bitcoin futures. Here's a 15-minute time frame. This is when that fake news was released saying, Bitcoin spot ETF's been approved, and it wasn't. I'd see tons of volatility in this thing. I'm not too worried about it. I think what will happen is when that release officially does come out, which I think will happen by next Friday. I'd like to see it tomorrow, but who knows? I think you'll see a spike up, probably get above 50,000 on Bitcoin, and then I think it'll sell off. And it'll probably get like a 15% correction on it, which would be par for the course because it's had such a huge run up. That scam announcement, a crystal ball of what to expect when the announcement is made about the Bitcoin ETF. I don't know. Yeah, password 123, right? Who knows, Lisa? At this point, it's all just speculation about what's going on in this world of crypto and digital assets. It just seems like it's a witch hunt by regulators to kind of keep pushing this down. You have almost all the major financial firms are saying we want a Bitcoin ETF. You've got BlackRock, you got ARK, you got Fidelity. These are major prominent financial institutions saying, yeah, we want a Bitcoin ETF. Now, of course, they're doing it for the money. That is the money side of things, but they're not going to be doing overtly illegal activities, at least this publicly. We know that they all do illegal activities and they usually get caught and pay some fine and walk away, but it seems like this is one that they're trying to be the first ones to it because there is plenty of opportunity here. Just keep people talking Bitcoin all good. Yeah, I agree with you. The more people talk about it, the better it's going to be. By getting the spot ETF approved, it just adds an air of legitimacy to it. And that's really my main thing at this point is I need legitimacy, which brings upon acceptance, which brings upon adoption. And once we get adoption, then my Bitcoin will be significantly higher than where it is today. So that was Bitcoin, number 7 on the list, not doing so well on the daily time frame, but it wasn't a bad day by any stretch of the imagination, just down 0.55%. Russell was your worst performer, down 1% on the day, giving back some of those monumental gains it achieved yesterday. But technically, I don't really see anything here that's going to cause a deviation from. It looked, honestly, like this breakdown we had here on January 3rd. It felt like, here we go. We're going to come back down and correct all the way down to about 1886. That was my thought. Now with that big up day, just kind of erasing that a little bit, we'll see if this gets a continuation tomorrow. Right now, I don't get any clear sense as to where this is going or at this moment in time. S&P 500 down 0.10%. Similar picture. I can get rid of some of these lines. We drew these, I'm not exactly what we drew these off of. I'll get rid of them just because I don't like the lines on there that I don't remember what I drew them for. Technically, still uptrend, right? Still looking great from those October lows, higher highs, higher lows. All things look good. The only issue was we broke this low a couple days ago, but we've since recuperated that one as well. Number 4, gold. Drifting lower, but pretty much unchanged on the day. Down 0.02%. SLV. A little bit worse at 0.62%, right? You had a gap up on SLV and then gave it all back there, so nothing really exciting there on SLV. I would like this to rally back up. As you guys know, I still have a lot of silver in my position, in my portfolio. And now, top 3, bronze metal, NASDAQ 100, tech, helping things push to the upside again today, up 0.16% to 16,830 on the NASDAQ 100. Technically, there's nothing there that exciting. I really wanted this to drift all the way down to these lows, create a buying opportunity, but we didn't get that on the NASDAQ. We'll see what happens in the coming days. Number 2, dollar index, the Dixie. We had 3 days of just pretty much sideways action. Today was up 0.23%, but nothing that's overly noteworthy there. And finally, erasing some of yesterday's big losses, crude oil was up 2.08%, closing at 72.29. Right, that's where it's at this exact moment. Let's see. I got a whole bunch of questions coming through. Let me see if I can get to some of these. And I got to run. I have some things I need to take care of. Apologize for that. Let's see. Merlin say, buy on the rumor, sell on the news. When the Bitcoin ETF comes out, the news might have it go down. But how far down might it go? And when should we buy? Good question, Les. I feel like I'm biased on this one. I don't feel like I'm qualified to say this is the buy point, because my attitude, as most of you know, is just buy Bitcoin and hold long term, right? If you look at the daily chart here, we really haven't had any pullback going all the way back into, let's say, mid-September, right? There's been a tiny little pullbacks here, but I mean, grand scheme of things, this thing just keeps on rocking to the upside. So what does that mean? Does that mean 44,000 is the buy point? Is it lower down here around 42,000? I don't really know. I think I mentioned, you get 10-15% drop. If we go from there and go 10%, 10% only brings us down about 41,500, right? If I go 15%, it's going to bring us roughly down to right around 39,000 would be right around 15%. Actually, no, excuse me, 38,000. either one of those could be good buy points. I kind of would just wait and see what happens. I don't think I would just be buying arbitrarily at this point. I think what you'll get is a quick knee-jerk reaction that does not go below 40,000. So let's say 40,000 would be the buy point there from the long-term perspective. Big M says, leg in less, don't buy right after the news. Yeah, exactly. If you got, let's say you had $1,000 that you could that you feel like buying some Bitcoin with, I would wait for that big sell-off, maybe buy $250 worth, see what happens, because there's just a lot of unknowns right now. I am of the belief that if you were to fast forward from today, one full year, 44,000, 46,000 is going to be distant rearview mirror perspective. It's going to be way back there. I do not think that we'll even be thinking about, people will be going, is it ever going to go back to 40,000 ever again? That'd be that kind of discussion in a year. Why do you think it will drop? Good question, John. Because right now, there's a lot of people who are buying Bitcoin with the expectation of the Bitcoin ETF getting approved. And it's the same thing when you think of a stock split, right? People buy the stock because they know it's going to split and they get double the shares. Well, the share price gets cut in half. But typically, between the time a company makes the announcement and the actual split, everybody's trying to buy it and it surges to the upside. And then the day after the announcement of a stock split, everybody sells their shares. And all of a sudden, price comes crashing back down. It's the buy the rumor, sell the news attitude. And I think a lot of people are buying Bitcoin right now just because they're banking on that spot Bitcoin ETF pushing prices higher. So as soon as that announcement comes out, they're going to unload, which I think is, in my mind, almost a foregone conclusion. You'll probably get a spike up, and then it'll come drifting back down. Now, how dramatic is that going to be? Personally, I don't think it's going to be that dramatic because you still have 6 or 7 institutions that need to buy Bitcoin to fill their coffers for the spot Bitcoin ETF if they get approved. So that's why. Hedge funds and government manipulation, Oliver, that's always a factor. That's always a factor. Let's see. All right, let me go down. Those are your guests and your targets. Are you talking about this list here? So I'm going to add this up and let me just put in here. Make sure I spell his name right. And we'll copy that over. And so Jeffrey's on. Yeah, this is everyone's year end. I have about 6 I need to put on here. I gotta put some on there. I would love it if Bitcoin crashed temporarily. Yeah, I mean it would be fine. I would be fine to buy some more. I'm okay to buy more. This is. I try to explain to people why it has such huge potential to upside, and it really has everything to do with limited supply. You have something that is definitive. It only has this much Bitcoin. And if we get more adoption, everyone's going to be chasing that smaller pool of Bitcoin. And there's Bitcoin being lost every day because people lose their private keys. And that just adds to the supply and demand equation that, in my opinion, is going to push it significantly higher, like monstrously higher, which is great. Let it happen. What's Bitcoin prediction? End of year, 87,000 by December. Yeah, probably somewhere around, I would say 70 to 80,000 by the end of the year. But it's this year is not the one I'm excited about. It's next year. Based off that 4-year cycle, it's the last year, which would be from November of 2024 to November of 2025. That 1 year, you're talking, like a 10x gain. I mean, it's just crazy rates of return in that window of time. So that's the big one. That's the big one I'm waiting for. Gotta love how that works. I love math, right? That's why I like having Jeffrey on the program and looking at Hirsch. By the way, I know I mentioned this already, but you guys should add Almanac Trader. I'll put it into the chat if you guys want, just so you can have it there. But you should, if you are a Twitter person, you should have him on there. He posts a lot of great charts, just some really good stuff. So there you go. There's Almanac Trader. Okay, I think that's going to do it for me for today. I'm going to wrap up here a little bit early. Let me go show you your economic calendar and earnings calendar for tomorrow, so bear with me 2 seconds as I bring this one up here. Tomorrow's guest is going to be Jeff Manson, as you guys know. That will be a fun program. Jeff is always interesting, and he's a numbers guy as well. I'd love to see his market forecast. So let's go to Forex Factory here, and I will bring up your calendar for mañana. Oops. What's going on here? I'm trying to type and do this at the same time. It's just not working today. I'm slipping. Okay, so we'll go calendar here and show you what happened. Today was really nothing important on the economic calendar front. Tomorrow is nothing overly exciting. It's Thursday and Friday that are the big days here for the U.S. markets. You can see tomorrow at 7 a.m. Pacific time, final wholesale inventories and crude oil inventories. I'm curious to see what goes on with those crude oil inventories. Here's your crude oil inventory chart. You're seeing drawdowns over the past couple, which typically will lead to higher prices. If inventories drop, that means supply. We're starting to run out of supply a little bit. So I'm curious to see if this continues on. The next one here, as far as prices going forward, let's see, a bigger drawdown would bolster my argument for energy prices surging. And that's it for tomorrow. Earnings-wise, there's really nothing that's exciting tomorrow on the earnings calendar. It really starts to pick up on Friday. Friday is the big day that we want to pay attention to. Earnings-wise, you have KB Homes tomorrow. KB Homes was the one reporting earnings tomorrow. 2025, we all going to be rich. Well, look, I don't want to look at it from the perspective of in 2025, we're all going to be rich. What I want to look at it from the perspective of Oliver is in 2025, I am anticipating Bitcoin reaching my price objectives. And if it does meet those price objectives, then I will be very happy with that. That's it. Is it, rich? I don't know. What's the definition of rich? Please submit a leaving early request. I'm leaving right now. All right, I got to get off this because I got to go take a call. So Jeff Manson will be our guest for tomorrow. If you guys have anything you want me to discuss, questions you want me to ask Jeff, if you send them in, I can get those put into the content for tomorrow's show. You can always email me at TraderMerlin@gmail.com, which is on your screen there, so send it on there. I don't know if you own XLE stock. I do, and just saw that they paid an 80-cent dividend. I don't own it right now. I'm not long on it at this point. I might be here soon. We'll see. But right now, I have very few positions open. As you know, I've got Walmart open. I've got silver open. I have Boyle open, which is the craziest position I have at this moment. Is Caitlin? No. Unfortunately, no Caitlin. But Jeffrey, we're going to have Jeffrey, and then Corey Lane will be on Thursday's show. All right, guys, that's going to do it for me. Thank you guys so much. Hope you enjoyed it. Love the stats. Check out Trader's Almanac, and I will see you all tomorrow. May all your trades be green when we talk on the show tomorrow. Take care, everybody.